Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN Wednesday afternoon, 3 p.m. Eastern Time, final hour of the trading day, and you got markets calming down a bit. We almost reach all-time highs. S&Ps, we reached 6160. The futures, 6 points. 6 points away from all-time highs, and we back off a bit. But boy, talk about a stone's throw. We're 23 points away from all-time highs. S&Ps negative by just 2 points right now, following the acceleration of the last couple days. Here's how we're going to kick it off on the program, folks. Okay? My dad used to kick it off that first segment. He'd do the market roundup. He'd do the market wrap-up. You love looking at price and volume, okay, as I do as well. Look at this volume. That's the only thing. Look at the last couple days in the S&P. Now, the NASDAQ is not like this. Okay, NASDAQ has more volume. But this is a pronounced drop-off right at those all-time highs. You're bumping up against it. We'll see if we can get that acceleration. But NASDAQ leading the way. And yes, a little bit of a drop-off from the move that we had on Friday. Okay, Friday. Now, Friday was triple witching. You traded 637,000 contracts. Monday's extension was 542, and then you had 441, but not the same degree of drop-off in the NASDAQ, really, with the S&P, as in the S&P. It's been less volume since June 13th, man. Yeah, down volume day then, right? We got a lot of volume on the day of volatility on Friday. Okay, but look at those days, man. And today doesn't look like it's going to happen either. Right now, we've only done 664,000 contracts in the S&P. We got 52 minutes left of trading. And yesterday, we did 1 million contracts, and you did 1.3 the day prior. And again, we're at 660. You'll get some volume at the close. But for some ideas of what you're going to get at the close, you're going to get about 100,000 contracts. All right? I mean, that's what you get, right? That final bar of the day. 80,000, 100,000, 100,000 contracts is when you're gonna, what you're going to get in the S&P. We're not even going to come close to the type of volume that we've been doing. That's what sticks out. That's what I kick off the program with. NASDAQ 100, not quite the same, but to a certain degree, yeah, right? We trade down with volume. You're trading higher with lighter volume, right? What would my dad say? There's less people in the store and they're charging higher prices. Inflation for stock prices, nonetheless. NASDAQ, man, it's on fire. Not Tesla, though. Dow. A little bit of a different story on the volume on the Dow as well. But that S&P, man, you watch that volume, similar on the Russell, but S&P 500, most important. And we're sitting right now flat at 61.46. All right, we jump to yields. How about the yield scenario right now? Now, you got a little Fed speak going on today as well. And we have higher price, lower yield coming at you right now in the 10-year. And you're talking about a 10-year yield? Come on. Yeah, 4.29. Gone right near 4.28 right now, man. All right, we jump to some of the headlines. Why not? Here's where we kick it off. Minneapolis Fed President Neil Kashkari. He's on board with Chairman Powell. Forget about Waller and the other Fed governor that was talking earlier in the week. I forget her name, Shimon. Yeah, he's well, let's do the headline, right? Needs more clarity. Okay, on the tariff impact. The last 2 or 3 months, the inflation data we've been getting has been quite positive. It suggests that disinflationary path has been on track, but it is not obvious that we've seen the full effects of the tariffs yet, so we've been taking our time to try to get a sense of what's really going on before we made any dramatic changes in our policy outlook. So nonetheless, their Fed meeting next month, July 29th and 30th, and on the heels of that, you get a little bit of higher price, lower yield coming back at you. The other federal today, right? I got it on a couple articles. I think it's on this one as well. Yeah, there it is. So, the Fed releases a plan to relax a key bank capital rule out there, okay? To roll back the enhanced supplementary leverage ratio, to reduce their capital requirement from 5 to 3.5 to 4.5, and from the same 6 to 3.5 to 4.5 for their subsidiaries. Now, we talked about this recently, okay, that they were pushing this through. The Fed will vote Wednesday to propose changes to what's known as the enhanced supplementary leverage ratio. Now, the articles I've been reading about this, it's not going to have a huge impact because what the banks would rather do is instead of buying more treasuries, they'll just do Buybacks. Yeah. The proposal will help to build resilience in the Treasury markets, reducing the likelihood of market dysfunction in the need. And that's who it was. It was Bowman. She was the other one saying that they're ready for cuts. And what it does, it reduces the bank level capital. That's it. Okay. And you know another way that they can do that is buybacks. The Fed temporarily relaxed the leverage ratio in 2020. COVID, of course. It allowed the banks to hold more treasuries without those assets affecting their leverage ratio. All right, I'm going to find that other article. Because there's the other side of this. Don't think this is going to be some catapult for the Treasury market. Because the banks don't have to buy them. That just means they can. And it's a leverage ratio issuance that they're dealing with there. All right, we'll jump over to Tesla shares. So Tesla, boy, those Tesla deliveries, man. It is quite a stark deal when you look at how they're dropping versus how the industry is growing right now. Okay. And you're talking about in Europe. I got to pull the exact numbers. All right, we'll pull it up after the first break because Tesla, even pulling the news, I had too many articles to pull the one statistic. Yeah, there's too many good ones out here right now. Let's see. So the 5th consecutive month of declining European sales. All right, we'll pull it up. Because Europe in general, the EV sales are climbing dramatically. Yeah, here it is. Okay. This is the statistic for Tesla. New vehicle sales have fallen 27.9% year over year in Europe last month, despite the EV segment growing by 27.2% in the region. You better hope the future is bright with whatever he's got going on with AI and robots and self-driving, because this thing is priced on the multiples of a dramatic growth company, and you're selling less, vehicle sales down. They're not growing, they're shrinking in a segment that's growing. Dramatic. S&P's up by 2, Tesla down 3.7%. We'll come right back, folks.
If you